this is MrChris. Today is Sunday, August 24, 2025. Recently, one of the biggest Yieldmax YouTubers, disappeared from YouTube and all social media. I used to watch his videos, and for a while, I didn't know what happened to his channel till today when I was surfing YouTube looking for information about margin calls. I think the reason for me searching for margin calls is due to the flash crash of ulty that occurred recently. The videos I'd seen about the downfall of We the Commerce were published about 4 months ago, meaning We the Commerce closed all of his social media channels right about April when the market went off the cliff. From what I've learned, he was very aggressive with margin. And when the market crashed back in April, he was margin called and ended up losing a lot of money. I feel bad for him, and I truly hope he's able to recover. And I know he will recover. When watching his old videos, I can see that he has this great determination to succeed in investing in high yield funds. But his story is a lesson for all of us. It's not the Yieldmax funds that are the problem, it's how you manage them. You see, I bet my retirement income on Yieldmax and other high-yield funds. And unlike We the Commerce, my portfolio is quite profitable. So in this video, I would like to share with you my management style in the hopes that you can also benefit from these high-yield dividend funds. But first, a disclaimer. Hello, this is MrChris. I used to be an engineer and a project manager for an oil and gas company when I was forced to retire from my job. So I started trading options using the no-loss method of the wheel strategy and investing in high-yield funds from Yieldmax and Roundhill. I am not a financial advisor, and all content of my channel, including this video, are for educational, information, and entertainment purposes only. Please conduct your own research and proper due diligence before investing. And if you like this video or any video in my channel, please slap that like button, comment, and subscribe. I would like to hear from you on how you generate your retirement income. Okay, let's go. We the Commerce took a very aggressive approach. He used heavy margin and went all in on Yieldmax dividends. That worked for a while, but the downside was brutal. When the market pulled back, his payback period stretched out indefinitely, and when margin calls hit, he was forced to liquidate, locking in big losses before any chance to recover. My approach is very different. Even though the market was down this week, my portfolio is still up close to $200,000. That's about a 20% total return. The difference comes down to how I manage my portfolio. Here's a snapshot of my portfolio. I built this spreadsheet when I started investing in Yieldmax to properly track all dividends I received from the funds and the loss or gain in the fund's net asset value. So I know what's going on with my portfolio at all times. Ulty is my best fund, followed by Misty and ymax, and yes, I have a loser at this point, and that is AIYY. I am down by almost $12,000 in AIYY, but the whole portfolio is up to close to $200,000 or by 20%. Last week or 2 weeks ago, my total return was around 27%, but when the market fell off this week, my return dropped to 20%. So how did I do it? Let me show you my management style. First, let us talk about dividends. When investing in high-yield funds, you must not treat the dividends as income, at least not right away. I treat every dividend as a return of capital until I reach 100% payback. Only after I've recovered my full initial investment do I consider dividends as income. My initial investment is around $540,000. The total dividend that I have received is now close to $400,000. I'm expecting that by the end of this year or early next year, the total dividend that I would receive from Yieldmax will cross the $540,000 mark. Currently, my average monthly dividend is close to $40,000 a month, of which about half goes to cash and the rest are reinvested in ulty or other funds. Recently, I also took ulty out of VIP because I want to start building cash just in case the economy hits a recession. So yes, I do not consider my Yieldmax dividends as income. They are returns of capital. Now, this philosophy is quite important because of the second management rule that I follow. The second rule is to focus on the payback period. Yes, focused on payback period. My background is in project management, so I'll always look at investments like the same way I look at a project. What's the payback period? How long until my initial cost is fully recovered? And how can I shorten that period? That's how I measure progress. This is the reason why I do not look at the fund's net asset value as the main gauge for the performance of my portfolio. I only use total return. Considering ulty, I originally did not have dripped on ulty. However, due to the fast net asset value erosions, the amount of dividend also went downhill with it. As the dividend drops, the payback period for ulty increases. So how did I recover from it and make more than $100,000 total return from ulty? I started drip for ulty. The drip process increases the total number of shares I own. This increases the amount of dividend I receive and starts shortening the payback period for ulty. Also, as my average cost per share drops, the amount of net value erosion dropped as well. It also helped that ulty's fund managers found their footing and seem to have stabilized its price and dividend distribution. The third rule is never use margins. Never use debt to earn passive income. I avoid reckless margins. Like I said in my previous videos, I do not use margins. I hate paying interest. Margin amplifies your gain, but it also amplifies your losses. Never use margins, especially if you do not have the cash to cover it. If you get a margin call, do not gamble your retirement money. Yieldmax funds already provide high dividend yield. Do not be greedy. This brings us to the issue of cash in hand. So for the fourth rule, have a hefty cash account. I keep a healthy cash buffer. About 50% to 60% of my retirement portfolio is always in cash. If any major market crash occurs, I will have the buffer to survive such an event. This also allows me to partake in any opportunity that a down market might offer. This is the reason why I do not use all of my dividend for drip. Half of the dividend I receive goes to cash and the other half for drip. Of course, if you are young and starting on your own investment journey, then go ahead and use drip to the utmost. But if you are an old geezer like myself, conserve that cash. Especially right now when interest can go as high as 4% for a cash account. The fifth rule is to reduce the impact of taxes. Although I have a taxable account, I only trade and invest in my traditional individual retirement account or IRA. The reason is that the gains I made in my investment are sheltered from the impact of taxes until I decide to pull them out of my IRA account. The compounding effect of DRIP is fully realized inside an IRA. I am currently 66 years old, so I still have around 6 years before I am required to pull a minimum distribution from my IRA. In my mind, the best vehicle to invest in high yield funds and trade options is in a Roth IRA. Unfortunately, I was not able to establish a Roth IRA when I was still working. Now, the sixth rule is to diversify your holdings and have multiple streams of income. Diversify your portfolio. My Yieldmax portfolio did great for me. And since ulty's strategies are quite similar to my option trading strategies, except that I do not use option spreads, I hold a lot of ulty shares. However, I know that I need to diversify outside Yieldmax. So I started a new portfolio using Round Hill ETF. The strategy is different, and the initial investment or assessment that these swap agreements used by Round Hill can generate good yield. I also trade options using the no-loss method of the wheel strategy. I have an aggressive way of trading the wheel strategy that in a down market like what we have this week, my pay per loss is now around $85,000, but I already made close to $200,000 of premium in 2025. This rule basically just tells me that in order to generate a stable retirement income, we need to have multiple streams of income. In about a month or two, I will also apply for my Social Security benefit since my SSS full retirement age is at 66 years and 10 months. and I will reach this full retirement age this coming October. Again, another source of income, although I plan to start receiving my Social Security benefit starting January 2026. And the last rule is know your exit strategy. When investing in high yield funds, cash is king. Remember that our main objective when investing in Yieldmax or Roundhill funds is to have a steady stream of income, and DRIP will not provide this income unless you start selling your holdings. So develop an exit strategy, or at least have a plan on how you extract cash from your holdings. In my case, I do not use DRIP for all of my holdings. I have part cash and part DRIP for the dividend I received every week, just like what I did early this week. I stopped DRIP for my ulty positions temporarily to accumulate more cash. Remember, for your retirement investment and income, cash is king. So you need to have an exit strategy or a plan on how to extract cash from your portfolio. Having cash on the side allows you to have more flexibility in managing your portfolio, but also afford you to take buying opportunities during market turndown. In closing, the Yieldmax funds and other high dividend funds from other companies like Roundhill, Defiance, or Granite Shares are powerful tools for income, but they are not magic. If you chase yield recklessly and use margin without discipline, you can blow up fast. I recommend not using margin at all. The market always has a cycle of ups and downs. Great for margin if the market is up, but when the market turns south and you are using margins, make sure that you are prepared for it, else it can spell trouble, just like what happened to We the Commerce. You need to treat investing in high yield funds like a business. Manage your cash flow, recover your capital, and focus on reducing your payback period. Then you can build real sustainable returns. That's the difference between my results and what happened to We the Commerce. So before you jump into high yield strategies or high yield fund strategies, ask yourself, how am I managing my risk and what's my payback period? That's how you stay safe and profitable. And if you found this helpful and want to see more about how I manage Yieldmax for retirement income, make sure to subscribe and follow along. Thanks for watching, and I will see you in my next video. Thank you. If you like this video or any of the videos in my channel, please hit the like button and subscribe, and join me in my journey in generating my retirement income through trading options and investing in high yield funds like Yieldmax. If you have any comment or question about the no-loss method of the wheel strategy or my perspective about Yieldmax, please write a comment and I will answer them the best I can. This is Mr. Chris. Thank you, and I will see you in my next video.